What I'm about to tell you isn't glamorous. It's not flashy. It's not a get-rich-quick shortcut, but it's the difference between becoming wealthy through property and wasting years chasing average returns. And I'll tell you right now, most investors are bleeding money and they don't even know it. Why? Because they're ignoring the single biggest edge they have in this market: data. Let me show you how to fix that before you buy your first or your next property. When I first started investing, I did what everyone does. I followed the crowd, I trusted what agents told me, I bought in areas I liked, and for years, my portfolio limped along. Some small growth, rent was okay, nothing exciting. I thought I was being conservative, but the truth was, I wasn't informed. Then I discovered the power of real property data, and everything changed. The more I leaned into supply and demand metrics, the more predictable my investing became, and the more profitable it got. Here's the deal. Every property investor has two paths. One, invest based on emotion, headlines, friends, hype. Two, invest based on evidence, hard data, trends, and supply-demand signals. And here's what people don't want to hear. If we're not using data, we're not investing. We're just speculating. We may still get lucky, sure, but we'll never be consistent, never confident, and definitely never scalable. Let's talk about the specific data points that actually matter. I'm going to split this into two parts: supply and demand. Supply metrics. Stock on market percentage. This tells us the proportion of properties for sale relative to the suburb. Lower stock equals tight supply equals price pressure. When this drops, values goes up. Days on market. How fast are properties selling? Short days on market. That means buyers are active. Long days on market. The market's soft. Vendor discounting. Are sellers discounting prices to get deal done? Smaller discounts equals buyer urgency. Big discounts equals oversupply. New listings versus total listings. If new listings are being snapped up immediately and the total stock isn't growing, that's a red-hot signal. Demand metrics. Vacancy rates. This one's critical for investors. A low vacancy means rental demand is strong and we can push up rent. Rental yield trends. Are yields growing, stable, or falling? Chasing capital growth is one thing, but don't bleed cash flow doing it. Potential buyers. How many buyers are looking for property? This shows real-world urgency. More views, more competition, more growth pressure. Sales volume trends. Are transactions increasing? That means confidence is coming back into the suburb. Here's the big insight. Prices don't rise just because the suburb is good. They rise when demand outstrips supply. That's the core formula of price growth. Tight supply plus surging demand equals capital gains. The earlier you catch that imbalance, the earlier you profit. If we're waiting for confirmation in the media, we're already too late. A lot of investors get stuck here. They look at suburb medians from the past 12 months. They follow top 10 lists in magazines. They go off rental yield alone. But those are lagging indicators. By the time numbers look good, the market's moved. The deals are gone. Smart investors look forward, using leading indicators. Is vacancy falling? Is stock tightening? Are people clicking more listings than last month? Are days on market getting shorter? That's how we see where the heat is building. Now, what can we do with all of this? Use it to plan your entry. Don't just buy because we can. Buy when the suburb's heating up. Target the right strategy. Want positive cash flow? Hunt for low vacancy, rising yield suburbs. Avoid dead zones. High stock, low demand suburbs can kill your momentum for years. Know when to sell or refinance. Rising properties and low inventory, that's our window. If we're not thinking this way, we're leaving serious money on the table. Let me say something hard. Most investors, they're doing the research, but they're really just browsing on listings on realestate.com.au. They spend more time choosing a car than choosing a 700,000 property. That's insane. You're about to make a 6-figure bet and most people don't know the vacancy rate or stock level of an area. That's why they get stuck. That's why they wait for the market to go up again. They have no strategy, no insights, no edge. Now let's talk about how we can actually make this doable. Because yes, we can do all this manually. We can spend hours a week crunching suburb reports, spreadsheets, or looking at different type of reports. But honestly, who's got time for that? That's why I use SuburbsFinder. It brings every important supply and demand metrics together. Side by side, you can filter by vacancy rate, stock on market percentage, days on market, rental yield, capital growth, and stack all of them. So instead of guessing, we're pinpointing suburbs that tick all our boxes. Want 6% plus yield in a suburb with falling stock and rising sales? Boom! 3 clicks. Want to track gentrification or infrastructure? We can do that too. This isn't about buying our next property. It's about building a portfolio with strategy. And SuburbsFinder lets you plan multiple purchases, track growth areas in real time, validate your buyer's agent, research locations before you commit, set buying rules based on data, not hope. It turns you from a speculative buyer into a strategic investor. And that shift, that's where serious wealth starts. I hear people say, yeah, but the level of research isn't scalable. Let me ask you this. Are you even scaling anything right now? Because if you don't own 3, 5, or 10 properties, you're not scaling. You're still building. In this space, you need to go deeper. You need every edge. You need every lead to count. Stop thinking like a big portfolio owner when you haven't secured your foundation yet. Here's the truth no one wants to admit. We don't need to be smarter. We don't need to be richer. We just need to be better informed. That's it. The people making the biggest wins in property, they're not guessing. They're acting on data and doing it before everyone else catches on. SuburbsFinder gives you the map. Our job is to follow it. So let me ask you, are you going to keep guessing your way through the market? Or are you ready to invest like a pro? If you're tired of slow results, if you're serious about building scalable, data-led portfolio, then it's time to use the tools that actually move the needle. Find the suburbs that no one's talking about yet and build your portfolio with power. Because in the property game, the winners aren't the loudest. They're the ones who saw it coming.